Hello, welcome to IGTV. I'm Angeline Ong, and here's a look ahead to the week starting the 19th of June 2023. First up, plenty of central bank action still. The set piece for the week, of course, Bank of England. Before we get to that, though, we've got loan prime rate figures from China, the RBA meeting minutes from Australia as well, and producer price index figures from Germany, and building permits and housing starts from the US. The minutes for Australia will be interesting to find out the policymakers' thinking surrounding inflation there, given they've just surprised yet again. Moving on to the latter half of the week, we have the minutes from the Bank of Japan's meeting as well, and we'll get further clarity on how much they're going to hold on to their very loose monetary policy there. We've got consumer price index figures from the UK, producer price index as well, and retail price index. Perhaps out of the three, consumer price index data is the most key in the UK if you trade sterling, because we are looking for some signs of a peak there in terms of inflation. Food prices very high here in the United Kingdom. And from the US, we've got API crude oil inventories as well. And moving further along, we have, of course, the Bank of England interest rate decision on Thursday, another hike expected after the ECB also hiked rates to try and curb very high inflation. However, what's going to be key is what the Bank of England says about its inflation expectations, because a recent survey shows that the public's expectations for inflation has eased in May. We've got plenty of data out of the US as well, including the testimony from the Fed chair and consumer confidence. These are the flash figures out of the Eurozone. And last but not least, we have consumer confidence data out of the UK on Friday, along with retail sales and manufacturing and services PMIs from both sides of the Atlantic, and the Baker Hughes oil rig count as well from the US. Let's cross over now to IG's Axel Rudolph to find out what the key trade in terms of technical analysis is for him. Is Bank of England high on your radar?
It certainly is, Angeline, yes. And as we all expected to hike its rates to 4.75%, so another 25 basis point rate hike, I think the 13th in a row now. That might have obviously an impact on the FTSE 100, which has already been lagging other European markets, such as the DAX 40 or the CAC 40, both of which have made all-time highs recently. And if you look at the daily chart of the FTSE 100, you can see here that we are currently testing pretty important resistance, and if we could overcome that next week, perhaps after the Bank of England's meeting and rate hike, then perhaps we could actually join those European markets in heading higher. But the key area to watch out for the next week basically is this one here I've highlighted in blue, between 7,655 and 7,688, because a break above there and the April to June downtrend line would probably propulse us up to the next higher resistance area, which is made up of the May highs, basically between 7,801 and 17 for the FTSE 100. So that's a possibility. But if once again we were to fail at this current resistance area, then it's quite possible that we may actually retest the 200-day simple moving average here in red at 7,549. And if so, would probably also slide back down to the May low around 7,433. So we're really at a key juncture from a technical perspective for the FTSE 100. And whether we can break through these resistance areas or not will determine most likely where the direction of the future next few weeks to months medium-term trend will be.
Thanks very much, Axel. Of course, that inflation figure, as you mentioned, will be key as well. Moving on the corporate front, plenty out there. We are counting down to the start of the next earnings season, but we still have a few earnings of note, notably out of the US on Tuesday. FedEx fourth quarter earnings there, not just the number that investors will be interested in, but also what FedEx says about the wider economy. Of course, FedEx is plugged into all parts of the economy, everything from Amazon to if you buy a sofa, if you buy anything, if you're a business that needs to send things via courier, via FedEx, that will give us a good indication of where the economy is heading. FedEx also has a lot of delivery goals on its carbon neutral operations. It's targeting 2040, so investors will want to hear more on that as well. Of course, we had numbers and details on that back in April, but we are expecting more details from FedEx on that. And then on Wednesday, it gets busier. We also have figures out of Berkeley Group, full year earnings there. Interesting reading, given what we've heard so far from the house builders here in the UK so far. And the mood is indeed souring, given inflation still is very, very high in the UK. And therefore, interest rates are likely to continue to grind higher here in the UK. And moving on Thursday, the big one to look out for, Mulberry, full year earnings, Whitbread out with a trading update, and also Accenture out with Q3 earnings. Accenture, another one to look out for that will give us some analysis on how the wider economy is progressing. Back to Axel now for a look at Whitbread. Axel, what is Whitbread telling us according to its charts?
Well, I mean, the charts are nearly up 30% at the beginning of the year, so it's looking very positive. And this is also on the back of Whitbread, who's the owner of Premier Inn. And basically, Premier Inn UK sales doing extremely well as people start to go out again and start to spend some time in Whitbread's hotel chains or restaurants. And as you can see here, there's not much to say on the daily chart, except it's going up. But if you actually zoom out and go on to a weekly chart, what is interesting to see is that we're heading back up again towards the April and February 2021 highs between 3,506 and 3,566 pence. And it'll be interesting to see after the trading statement for the first quarter, which is out on Thursday, whether we can actually reach that resistance area. Because if we were to manage to break above it and close above it on a weekly basis, from a technical perspective, the way is open for much higher prices with regards to the Whitbread share price to be seen. So 4,000 pence, for example, or even higher. So it's really interesting because we're heading towards these 2-year highs, and we'll have to see whether next week we can break through these or not on that trading statement. But even if we don't, and if we see a short-term correction in this very strong uptrend, I wouldn't be surprised if the uptrend were to continue over the days and weeks ahead, simply because it's been so strong so far. So I would personally buy a dip in this share price if it were to occur at all.
Interesting stuff, Axel. And that does mirror many of the big banks as well that have said that the revenge travel trend will continue to uplift these stocks like Whitbread. HSBC's top pick, I can tell you, actually is Whitbread, followed by Accor as asset heavy players like those benefit from a structural shift from unbranded to branded hotels. And that's the latest look at the week ahead and the market moving events. As per usual, do log on to IG.com and our Twitter page for all our in-depth analysis.